You've decided it's time to buy a home and you've heard about FHA financing. You're just not 100% sure it's going to be the best option for you. I'm going to go over the 5 most important traits of FHA financing for you right now. It's likely going to help you decide whether or not to go with it or find another loan program. As a lender, I love FHA financing. It's actually easier to get somebody FHA financing than most other loan products that we deal right now. What I'm going to cover now is the 5 most important traits of FHA that you as a buyer should be considering. We'll start right off with number 1. FHA is often going to be the lowest down payment, the lowest out-of-pocket option that you're going to have in purchasing a home. FHA does have a minimum 3.5% down payment requirement. We all know that on top of the down payment, you've got closing costs. Closing costs can range from like 1% to like 5% of the deal. So if we just go with a typical 3% for closing costs, you're looking at 3.5% for the down payment and 3% for the closing costs. That's 6.5%. Even that is going to be lower than most other loan programs. But with FHA, they take it a step further. They make it very easy for a lender or a seller or somebody else to help cover your closing costs, bringing your total out-of-pocket down to just that 3.5%. If that 3.5% is still difficult for you, FHA allows all of that to come as a gift from a family member. You could potentially purchase a home with FHA financing where the seller or the lender pays for your closing costs and a family member gifts you the down payment, putting you in that home with 0 out-of-pocket. Similar strategies are possible with other loan programs, but not nearly as simple. The next trait is that FHA is not as sensitive to credit scores as most other loan programs are. So this means if you have a moderate to low credit score, your interest rate and your fees aren't going to be impacted as much with FHA as they would with the other loan program. Now, when I say moderate to low scores, I'm talking pretty much any score under 680 all the way down to about 580. If you're below that score, start working on it now so you can raise it up above that threshold and have some options when it's time for you to buy a home. Important trait number 3 is that FHA has relatively short waiting periods after major events. Events like foreclosure and short sale and bankruptcy, things that so many people have gone through over the last decade or so, FHA has some of the shortest waiting periods after that. With foreclosure, you're looking at just 3 years. With a short sale, in most cases, it's going to be that same 3 years. There's some interesting options within FHA where you can shrink that down a little bit with short sales, but those are complicated. So think of foreclosures and short sales both as being 3 years. Bankruptcies for Chapter 7s, you're looking at just 2 years. So these are relatively short time frames when you consider other loan programs can be up to 7 years. So you don't have to wait nearly as long to step out there and get into a new home. Now, the next trait is very important. FHA only allows you to use their financing if you're purchasing the home to actually live in it. So if you're trying to buy the home as a second home or as an investment home, FHA financing simply doesn't work. It only works when you're purchasing a primary residence. If you're looking to do something besides that, you're going to need to explore other loan options. All right, and last but not least, the final trait with FHA financing is that it always has mortgage insurance. There's 2 types of mortgage insurance that goes on most FHA financing. The first piece is an upfront fee. This fee is varied over time, but what's important to know about the fee is that it's charged up front and it can be financed. So you will technically see it on your final settlement statement. You did technically pay that money, but it's financed into the loan. So you didn't come out of pocket with cash at closing for that, which makes it simple again to get in with as little money down as possible. The second type of mortgage insurance is something that you pay annually. It actually shows up on your monthly bill. What's unique about FHA's annual mortgage insurance premium is that it's there for the life of the loan. Other loan programs also carry mortgage insurance when you put less than 20% down, but often that mortgage insurance can be removed at some point. FHA's is going to be there for the life of the loan. The only way to remove it is to refinance out of the FHA loan into a different type of loan that does not carry mortgage insurance. All right, in a nutshell, that's it. FHA is going to be the best for folks looking for the least out of pocket. It's going to be great for folks that have moderate to low credit scores. If you've got a recent credit event like a foreclosure, short sale, bankruptcy, something like this, FHA is going to be a great option for you. You just need to keep in mind that it's only going to be used for primary residences and that mortgage insurance is going to be something that you deal with for the life of that loan. Now, if you have any other questions on FHA or other financing, just give me a call, 480-744-6040. If you'd like to apply for a loan, you can click on the link in the description or just give me a call as well. And if you're enjoying the videos, please make sure you click on the like button. If you know of anybody that could benefit from this information, please feel free to share the video with them. And of course, if you'd like to get all of our updates, make sure you click on the subscribe link and they'll come to you every single week. Thanks for watching and we'll talk to you soon.